Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market gained ground again last week, rebounding from a big drop the previous week. Monday was the biggest day as markets surged overnight early in the day on news that the government was buying directly individual corporate bonds. And also helping later that day were more hopes for a treatment for COVID-19, and the market got pushed up very sharply. Well, Powell and his coven, seeing the market drop 7% in a single day, well, that stirred them to try to do something to bring a rally. And out of their cauldron of potions, with some hocus pocus, they brought forth something that previously would have been considered illegal. As the Fed is only really supposed to be buying government-backed securities, avoiding anything that offers taxpayers risk, but they conjured up some workaround where the Treasury can buy through an SPV, and then they guarantee that. So that means they can now buy anything that includes buying stocks if they decide to do that. The Fed is working to accomplish a full takeover of the markets. We'll call it full Japanization that's coming forward. And they certainly believe if they do anything less, certainly our economy would be in ruins, looking a lot like Pompeii. Well, if you look at what's going on now with crisis and civil unrest around the world, well, maybe we're not getting that far off, and maybe they do have some reasonable reason to believe that the economy is in a lot of trouble if they don't do what they've been doing to this point. Personally, I think they're heading in this direction anyway. So after that big Monday surge, the market chopped in a range. Caught up in fears of the COVID-19 and need for further shutdown and economic data that is just horrible, yet the bulls spin it. And anything that's negative, of course, is positive. And they look at little pieces of data that look like the economy bottomed. The data is absolutely horrible. So here we are, have a squeeze going on between what they deem as positive and the negative news that's out there everywhere besides COVID-19. And you get these upticks in the stock market. And we've really been kind of stuck in this range for these last 4 days. We have kind of a drumbeat going on of issues. It's political season, of course, and we have civil unrest and Bolton's book that came out that trashes Trump and trade issues, which may be slightly improved today, which gave the market a lift on Friday, which it couldn't really hold. And all that is probably playing a part in the market sideways action that we've seen. There is more talk that the recovery is going to take a very, very long time, and talk about permanent damage and the fact that many parts of the economy are not going to come back, and retail is absolutely in a lot of trouble, and the consumer is pulled back in a massive way with the savings rate just exploding to the upside, and that tends to not be a positive thing for the economy. I think that June 11th 7% drop is the start of something. Our analysis for the last couple of months was pointing to a large summer pullback. Now, if we could get a 35% drop in 4 weeks, followed by a 47% increase in some 6 or 7 weeks, then a 12 to 20% or larger drop this summer should be easy. That's really what we're expecting. Investors know that between now and June and the November election, it's going to bring convulsions here in the U.S. that maybe have not been seen since the Great Depression or in war times. So there's so much going on right now. I think that the investors are done in this rally, and that 7% drop that we saw, we're just getting a bit of a rebound now, and there is going to be some serious downside days coming just ahead of us. I'm going to show you that, of course, when we get to the short-term view. For the stock market this week, we've had pretty solid gains. S&P close to 3%, Nasdaq 4%, the Russell just under 4%. Bond market was unchanged on the week, really trading in a tight range. Gold gained strongly on Friday. It was down for the week and now gains $20 on the week. Silver, the same thing, as it gains about 40 cents plus on the week. And I do want you to watch the video that we put out on Thursday, and that is looking at a big picture analysis at the dollar, gold, and Fed actions. You're going to be blown away by that video and the information that's in there. I can't believe how many emails I'm getting regarding that video and I'll quote the word fantastic it is, and I think that's the case. And you're going to see a chart on there like you have never seen before. So that's for level 2, 3, or 4 members. Make sure you do become an askSlim member. So that's talking about the gold market and the dollar, which was up about 0.4% on the week. It's unusual that you get gold and the dollar gaining together. And again, you'll see that in the inverse correlations when you watch that video. Oil gains about $3 on the week, as OPEC seems like they are holding together right now. So there's been some favorable news out there. I want you to, if you're watching this on YouTube right now, make sure that you subscribe to the YouTube channel. Give us a thumbs up if you like this video, and make sure you share it. Send it to as many people as you think are interested in the markets, and I think that they'll be happy that you did. Make sure you follow us on Twitter at askSlim, and if you want more info about our memberships, please do let Matt know by writing Matt at askSlim.com. Here's a little sneak peek right here announcing our popular services preview, June 23rd to July 7th. Just become a free askSlim.com member. I'm going to bring you the details of this a little later on the show. So I just wanted you to get a little sneak peek of that. So we're going to do something a little different today. I have had amazing response to me doing trader education pieces here in this show, and we're going to do that right now. The principle of commonality. Breaking down the Nasdaq. Well, breaking down has a couple of terms right in here. Breaking down the analysis, number one, and number two, the breaking down, in other words, the downside movement of the Nasdaq that will likely happen as the markets roll over in the summer and go into a sizable correction. So the principle of commonality is one of the 8 Hurst principles in cycle analysis. If you go to our workshop page, there's an introduction there that I think is really good, and Matt has a informational reel that he can send to you if you write at matt@askSlim.com regarding that workshop. If you like the analysis that you see us do, which is quite unique, taking that workshop would be fantastic for you. So the principle of commonality essentially says that like securities act in a similar way. They tend to peak together and they tend to bottom together, and that usually occurs in groups, similar groups. And when you identify cycles in those groups, you do see that happening. So of course the Nasdaq has been the leader of the stock market now, as we're in this stay-at-home world where people are working from home, schooling from home, connecting from home, and all of that has put a huge demand in technological products, whether it be computers or software or things like Zoom and lots of other companies that have benefited from the stay-at-home, work-at-home environment. If you can analyze the Nasdaq, you've got this market figured out. And we're going to do that right now. And I'm going to show you some interesting information and do some analysis for you on 7 stocks that I think should be the watch list that you have up when you want to understand the condition of the stock market. And I will show you why. So we're going to switch over here, and this is the Nasdaq right here. And what I'm interested in showing you is the heavy weights in the Nasdaq and the importance of understanding the condition of the Nasdaq. So what we have in here is, and I've listed here, the top 12 weights. And we're going to focus in on the top 7 symbols. It's actually 8 because Google and Goog are combined in here. And these top 7 stocks in here, believe it or not, Apple, Microsoft, Amazon, Alphabet, Facebook, Intel, and Nvidia are 50% of the Nasdaq index. And being that the Nasdaq index is the driver of the stock market now, then that tells you figure out these 7 stocks right here, 50% weighting, and you understand the conditions of the market. That's it. 7 stocks that we're going to look at. It's actually 8 because we're going to add in the Nvidia to get to 50. And you will see just a tremendous amount of information that you will have. So let's take a little closer look here. This is like the short-term view in the S&P, but I'm going to give it to you on the Nasdaq in here. So we have something a little different than here because there's a couple of scenarios. First of all, I believe that it was going to fail in the minor resistance zone. It has been creeping up, though the Nasdaq, of course, is stronger than the S&P 500 or the Russell. So we're in this area of minor resistance. We are projecting the market to turn over, whether it be following this track, which would be a more negative track, or this one right in here, which we put in, with this second cycle being the negative track and taking you for this big decline into the summertime. I give the dark blue one the heavier weighting, though this is a potential. And I wanted you to see both of those. Both of those set up to a negative scenario out over here that goes into the end of July or beginning of August. And the key thing to look at in here is that momentum has been strong. So I want you to look at this period right here. Well, that's a little funky. Here is the period right in here, and you could see the momentum, which is given to you by the slim ribbon, which turns positive right here, has been this upward driving energy that we still have the positive momentum. Now, I'm going to show you in these stocks the principle of commonality, that if you figure out these 8 stocks, you essentially have the stock market figured out. And I'm going to show you the 50% weighting of the Nasdaq. And this is all you need to understand. For the stock market to move to the downside, these stocks have to give it up, and you'll see here as we look at that. So take this mental picture of what the Nasdaq looks like. And of course, Apple, which weighs 11.9% of the Nasdaq index, which is essentially the whole stock market, has the same pattern. You could see that exactly as it has turned higher over here, positive momentum conditions, and then driving its way up in here. We are looking for it to roll over, but it doesn't really give you a breakdown unless you get under 132.58. That's about 17.5 points or 18 points of where it is right now. That could happen, but that's what it's going to take. Apple's going to have to make that break, and it would come very likely coincidentally with these other stocks, and they would be leading the stock market into the next correction. So you could see the beautiful cyclic rhythm in there, and now the beginning of this principle of commonality at work, where you have the like stocks acting alike, and you have all of that being the heavyweights in the market, so it's very meaningful. The next heavyweight, as it has been increasing, is Microsoft at 11.4% of the Nasdaq. Here you could see we have what we call in the configurations, and the reason this is highlighted yellow is because I think that where we are is a similar time period to right over here, where you had the kind of the testing of the top right over here, and then the breakdown coming, and this is where the intermediate pattern turned down and the stock market fell 35%. Not necessarily that kind of a big break coming, but I think this is the double top about to form. But again, we need this to come down at 11.4% of the Nasdaq, and it would need to get under 190.82 to give you that cycle support breakdown and to have us in this very significant downside that I think is not far away. Here is Amazon, and you're going to see these similar pictures as the stocks have very much benefited from the stay-at-home scenario. Again, momentum strong, principle of commonality showing you almost the exact pattern that you have in here. The earnings projections in here are just, I think, through the roof. A 65 forward PE in here is absolutely crazy for Amazon, and there's no way that it's going to make those earnings because the cost of operating in this stay-at-home world are just enormous and growing, and that's going to make these earnings not be able to get there. So we could very well be trading at an 80 PE as far as I'm concerned. We need to get under this level here for a breakdown of 25.0335. That is the cycle low support, and it would take that breakdown to set up what I think is going to be that negative period into the summer. So that's a look at Amazon weighing 10.2% of the Nasdaq, or really of the whole stock market when you consider it. Google, which when you pair it with Goog, G-O-O-G, weighs 7.8%. This one you can see similar to all of them. I can't make much of a case that's different, other than the fact that it looks like it's a little bit further away. It's trading on the slim ribbon right over here, and I want you to note that the slim ribbon looks like it's starting to fail. In other words, this is getting tighter, and that means momentum is starting to be worse, to weaken. Cycle support right over here, 1385.80. It's going to need to break underneath that level in order for the market to be in the free fall condition that I see coming. The next two stocks are the weakest of them all, but still positive. Facebook, I would say it is the weakest of them all in that it's threatening to lose its positive momentum. It actually has that downside gap right over here, which it filled, but you can see the top here, and it's below that right over there. Momentum's still strong, as you can see, but as our projection in here points to that break, it needs to get under 222.88 to give you a breakdown in there, and I hope you are getting a good understanding of the market when you look at that. Intel, INTC, is different in that it's got a little longer cycle patterns than these other ones. It had a choppier period here where it lost its upside momentum, and it's done that again right now. So there's a pretty good likelihood it's going to try to get up here again one more time. This is a little early for a failure, but if it gets under 58.12, it's over with, and then this decline takes you out to this date right over here, which I want you to see, which projects out to August 1st. So all of these things are projecting out to late July or the beginning of August, and a pretty significant declining phase, I think, coming out there. Negative momentum in here. I think that you could get one more upside rally because it's a little early for a breakdown, but that's probably won't last too long. So those of you that are taking a long side trade based on the information that we have shared recently this week, I think there's only a small window for profitability in there. NVIDIA, NVDA, you can see that, and there you go. The perfect match to what we've been showing you, upward momentum. All of these look exactly alike. That is the principle of commonality. So keep watching them. You'll see one or two of them start to break to the downside, and you'll start to get some tip-off in there. Once they start to get under the slim ribbon, you're going to know that there is some issue in there that's going on. Right now, NVIDIA is showing you a lot of strength right there, and you had this abandoned baby, which essentially says 380 is a top level right there, and I think you're going to see this rolling over pretty soon and moving down. So I just showed you 7 stocks in here that are basically the stock market under the conditions that we're in right now. These seven stocks must lead the way on the downside if we're going to have a real correction. I expect that based on the longer term patterns that I see in the stock market, that is already beginning, that we're just in the phase where we're going to start to roll over. And you will see this principle of commonality take over, and as far as a source of knowledge for you as you look at these 7 stocks. So Apple, Microsoft, Amazon, Google, Facebook, Intel, Nvidia, 50% weighting of the Nasdaq. That is the stock market, and if you can focus in on those, you'll get a good sense for when this market really is in trouble. Right now you can see all commonly basically in uptrends still, all commonly have a likelihood through these positive momentum that there's going to need to be some force to break the inertia. Right now the upside inertia is still there. It needs something to interrupt it. It may be these resistances that are up there. It could be anything else, like just a conditions that I described to you earlier in the show that could really scare the market. So that is a look at the trader education for today, and I hope that you are educated in some way. And I'd love to hear from you regarding what you learned from this. And that's always, in my opinion, the core of what we do here at askSlim. Go check out the workshop at askSlim.com, and you'll be able to get that information on learning about cycle analysis. All right, so now we're going to move into the short-term view for the week as we look at light crude, gold, the dollar, the bond market, and the S&P 500. I was off last week, so there's not a lot to say other than the fact that reviewing everything that I said for the coming 2 to 3 weeks, that was 2 weeks ago, I was pretty accurate. I mean, 75 to 80% is what I'm going to give myself. If I missed anything, it's just that the decline in the light crude market didn't set up yet, as it's moved up into the resistance area I'll show you. And the bond market, we were just a little bit off on that one also. But we really did very well as far as gold, the dollar, and the stock market. All right, so now let's take a look as we switch over from that NVIDIA chart and look at light crude /CL. So here's the light crude market. What we see in here is a range, $41.50 to $37 on the downside. So we had a little tightening up of the cycles in here. We made that a little bit smaller. You can see the clarity in these cycle rhythms in here. This is a swamped cycle. In other words, this upside momentum, as indicated by the slim ribbon, is so strong it would not allow this correction. It's pretty much the same right over here as that was swamped. Also, slim ribbon very, very strong. You can see in here when the projection oscillator throws off these buy signals that are right in here, it simply says that this upward momentum is still solid, and it's either the point to add to your position if you're long, or to understand that the momentum is still in an upward condition. When it's negative, you could see the sells come in there and that the market just simply moves down. So this is some great information that our level 4 members get on their Thinkorswim platforms as we share our charts with them. So this is this little upward trend in here. We think that this area 41.50 is where it will stop. It likely has a move down coming out over here in the next 3 weeks. So we're kind of looking for up and then maybe down and then maybe up again out over here, with this getting down into the mid 30s over there out in a couple of weeks. So that's kind of what we have, $41.50, $37, really the range we're looking at in here. I don't think there's a chance for any big upside spikes, and only OPEC falling apart or the stock market crashing, I think, would bring you any kind of a sizable decline in here. Momentum strong. Actually, all momentum is to the upside. Some of the evidence really shows to us that the uptrend is intact, though we think we're going to be range bound. The gold market /GC, and by the way, some of the evidence is everything that we try to bring you as we look at so many different types of analysis. So I look at the gold market, and I want to tell you again, watch the big picture analysis we produced on Thursday on the dollar, gold, and the Fed. It's going to blow you away. You can see what we're looking at right now is that this gold market has a little bit of a breakout right over here as it moves up. It moved ahead of this little triangle formation. Here's where your supports are. This is where your resistance. It's really tight. We've been in this very tight range, and we have this triangular shape going on. This triangular shape is representative of what's going on the intermediate, longer term patterns, which are suggestive of the fact that somewhere in here, either this rally right in here or after some further extension out over here, it's likely to explode on the upside. So watch that video. You'll get really a detail on how I think that sets up and why it's going to happen. So we really think that the intermediate low is in place. It probably came right in over here, but it could test it out over here. If you get out above this level, this downtrend, and this level right over here at 1770-ish or so, you're probably in the beginning of the upward spike. So we're watching that pretty carefully. Another resistance right over here at about 1810, 1808. So there's lots of resistances over here. There's some powerful supports down over here. And that's why we're looking at this range, kind of 1770, 1715. Until I think the probability is overwhelming that the upside breakout is going to come versus a downside break. So do watch that video. Some of the evidence, I think it's all in gear for a breakout in the next several weeks to the upside. Intermediate momentum is still negative. It needs to get an upturn in order to be able to feed this rally in a powerful way. That's what you want, longer term momentums to take a hold of this. And when they join with the short-term momentum, it gets to be really strong. Look at the momentum in here. It is non-existent. You could see this when the slim ribbon is laying on itself, there is no momentum. It can't establish right now. So you get attempts on the upside, attempts on the downside, but they're just attempts. They're not anything. The market will tell you when it's real. And at this point, you're not going to catch the exact moment it takes off on the upside. But I do think you will see it when it begins to come. And if it's a breakdown, I think you'll see that also. I think it's very, very unlikely. So the other part of that analysis was the dollar index, DXY, and of course looking at the Fed actions, which you'll be astounded. And here's where we are right now. We have really this big diamond pattern that's formed in here on the intermediate. And now we have this breakdown. And now we're rallying up right over here. The dollar, in my opinion, is a sell. Maybe the best way to sell the dollar is to buy the euro because it's 0.57% of the dollar index. And we think the dollar is going to take a hit here, and then further out, it's in, I think, a lot of trouble. So we're looking in here at this thing turning over again and beginning to fail in here. Some of the evidence really is big dollar risk, momentum quite negative that you see in here, and it all sets up to a lot of trouble in my opinion. We're looking for it to fail up in this area of 97.60 to about 98.10, 98.15, right up over there, and then be moving to the downside again. If this comes, watch gold. See if that gets gold moving on the upside. Gold, moving up this week when the dollar has been moving up, that tells you something, doesn't it? When you see that based on the real correlations. That's a look at the dollar. Next thing we'll look at is the bond market. Remember, short-term view, looking only at the daily patterns in here. Now, I want you to see the clarity in the harmonic patterns that we have in here. So again, if you take the workshop, you will learn about the principle of harmonicity. As harmonics are formed in here. There's harmonics being very much like music. Here are your minor thirds right over here, and you could see the 1, 2, 3 cycles. Here's your first minor third right over here, likely to pull back, but it creates a buy zone because this is pushing up right over here. That's like right over here right? But it didn't go anywhere. It got stuck as the Fed really has taken over this market and doesn't want it to move very much. So we're looking for a little dip in here. We could see the bond, the 30-year pulling down here to into that buy zone that we see here. The top of it right over here at the 89-day moving average is at about 175.08 right over there. In the middle of it right over here about 174.08. So somewhere in this area right over here we could see it pulling back, and then when it does, we think we get a buying opportunity then. So kind of a pullback period in there. We'll look for the next couple of weeks to see a decline and then a rebound. That probably is in line with the inverse of the stock market, maybe a little more rally, and then the stock market starting to head lower. So we'll look for this dip that we have in here to be a buying opportunity. Some of the evidence is intermediate patterns are in a rising phase, and we think that there's more upside coming as we have projected right in here with that support zone giving us an opportunity. So that's a look at the first four different markets that we look at. We're going to look at the stock market in just a moment. But I want to announce to you, in fact, this is announcing Popular Services Preview June 23rd to July 7th. What this means is that everybody who's a free member is essentially getting a free peek to our most popular services. We wanted to just pick out the best ones, give you a couple of weeks to come in and take a look at it. Of course, we'd want you to be a subscriber, but a lot of people say, I want to see what you do first. So we're accommodating that. We want you to come in and take a peek. So what you're gonna get is the Slimulator Momentum Tracker. This essentially is for investors or position traders. It is an amazing algorithmic app that allows you to put in any one of 1,000 symbols or look at our canned groups that we have in there and get an amazing understanding of the momentum and conditions in our analysis that is just phenomenal. It's a great app, and you will see how that works when you come into the site. You're also going to get, and by the way, that would be a level 1 content if you just want that. We're also going to give you our most popular level 2 content. The Stock Index Report SIR and the live stream. So you get the Stock Index Report, the daily snapshot, and you get the Stock Index Report SIR live stream. So what that is we send you a link every single day, and the short-term traders, the people that trade indexes, love this. You're going to get an opportunity to look at that and see all of our analysis that is done by Matt and RV and I. You're going to get an opportunity for all of that and lots of this stuff that we're bringing you. And this daily snapshot, daily live stream, packed with information about the indexes. That's normally level 2 content. It will be free to you in this 2-week period. And the Future Speak show. That's on Wednesdays. I do a review of 24 different futures contracts. That is the most in-depth futures analysis in 60 minutes you will ever see, as I illustrate cycle analysis. In all of these different contracts, I bring you great information on correlations between them and how to use one market to trade another market. So you're going to see this very in-depth analysis where I look at intermediate and short-term patterns, and it really will be fantastic. We have now just added Bitcoin to that analysis. So for those people that have been demanding that, you now will be able to see that. That's all of those things are level 2 content, and now we step up to level 3 content. Slimulator ranking system. You're going to see our rankings and the conditions for the 84 best traded symbols, stocks, ETFs, and futures. Again, fantastic information that we put in here. RV does an amazing job on this stuff. His trade ideas have been just phenomenal. You're going to get trade ideas which give you a great picture of and including videos that RV puts up and shows you the analysis that you can see what the analysis is, where the entry zone is, where the targets are, And you get an accounting essentially of how they actually did also, because you can just highlight each of those and on the trade ideas page and see how they did. And you'll see lots of green on there because RV has done a tremendous job in that. And of course, all of that has my input and overview on all of those things. All of that for free to you. All you have to do is become a free member. 2 weeks of this free peek of popular services, and you'll get all of this information. Just become a free member. Go to askSlim.com, click on Become a Free Member. You don't need a credit card. It'll pop up there like it's billing, but it's not. It shows 0, and it's free. And all you do is click on that, fill out that tiny little bit of information, and you will become a free member at askSlim.com. You want more info on any of this information, write Matt at askSlim.com, and he will be able to give you that. And also about other aspects of all of our memberships, Matt is great and offers walkthroughs of the site for people that are prepared to become a premium subscriber, and really shows you exactly everything that's going on in our amazingly broad amount of content that we have on the site. 500 videos that I've produced, trainings for you to become a better trader. That's not part of this free preview, but all you would have to do is become a level 2 member to be able to get all of those 500 videos. So right now, free preview, June 23rd to July 7th. Just become a free member at askSlim.com. So now we're going to get into the short-term view for the U.S. stock market. I know you've been all waiting for this. Yes, we've talked about the market turning down, and I did give you an educational piece of what it would take. How will we know when it's really happening? Because we need to get those 7-8 stocks that are holding the market together to actually turn down, and that principle of commonality will probably have them all turning down together. The market is right now in a time period where it's trying to rally but not able to hold rallies, and that is changing. So let's move over from this bond market to the S&P 500. And I've added a little bit of a projection in here. The reason I did that was because I want you to essentially see how you can get a good sense for what is actually happening versus what might happen. So just as I showed in the Nasdaq earlier in the show, you can see that we have had a period of positive momentum right in here and positively configured cycles moving up. I am projecting that to fail in this resistance zone because of the sum of the evidence, which shows that the intermediate pattern, which is a dominant force, is peaking. That's why I have this turning down right over here. It's like when this one turned down over here and all of a sudden accelerated on the downside and then gave you a collapse of 35% there. Remember, I'm not projecting 35% down now, though I'm projecting 12 to 20% down now, which is, I think, takes you into the summer. I would like to see it down over 20% just so that this whole idea of a new bull market is just wiped out, because I think that's ridiculous. So here are the two projections. If you were to stay in this normal upward pattern that you see right over here, this is probably this gray dot, which is illustrating a little, let me get a closer look in here so you can see, which is illustrating the second track of what I think this corrective period would be. This is the more negative track. I think it's the highest likelihood. You can see the failures going on in here. Anybody who wants to know why a down bar is green, it's because the slim ribbon programs in momentum. So as the momentum is positive, these all stay green. When the momentum turns negative on this programming, as you can see right over here where the momentum turned negative, this all turns red. Also, we put in here when the projection oscillator gives you these signals, it gave you the last buy right over here, but you could see it's not quite giving you the strength. And that's coinciding with what I believe about the intermediate patterns weighing on it right now. So what we are projecting is the highest likelihood that the market chops in this area and then accelerates to the downside. It needs to break under 29.65. This area right over here, that support which is, that's not 29.65 is not what that is. That's that support right over there. Actually, this low right over here is, yeah, 29.65. That is right. So this is slightly out of place. I just need to move this right down over there. Well, that's the intermediate 23% fib. Let me put that back and duplicate that. And there's that 23.65. So there's the importance of those two numbers right over here. The intermediate fib right over there and the cycle low right over here, that if it breaks down underneath that 29.65, that would coincide with the breaking of the Nasdaq. Also, of course, that we looked at as the potential. So you could see the failures in here. We're going to call the next week the likelihood of more chop, but then moving down. Here you can see the support zone that you have in here. This is 30.78, 30.58, and the bottom of this is about 30.32. This is where we would think that it might stop. You can see the slim ribbon faltering in here, but not quite turning down. And I said this rising phase is very important. If you can't get in here and above that area, like this alternate projection is pointing to, then you know what's going on. You break under the slim ribbon here, under the support, under this 30.32, and it's in a lot of trouble. I mean, then you're just going to know. So this is a picture of what we think. The sum of the evidence is saying to us that the intermediate is peaking. That sets up upside failures that you see happening right now, as you see right there. We think we're going to see that, and we believe there are two waves to the decline coming, as you see projected right in here. This wave here, which takes you into July 8th, and another one over here that takes you into the end of July, beginning of August. That's what I think is going to be the corrective period here in the summer that we've looked for. And again, it could be down 12%. That takes you down to this level. It could be down 20%. It takes you down to this level, about 2650-ish or so. It would be under there, about 2600. Would take you down about 20%. You can get these live charts, of course, on your askSlim platform. On your Thinkorswim platform, which is our preferred broker, just by becoming a level 4 member. And you get all this information, including the projection oscillator and our proprietary market condition indicator, option bias indicator, all of those things in level 4. So this is the two tracks that we're looking at. We think it's a high probability of the more negative track is what the market is facing in here. And we just gave you all the important levels as we're projecting, yes, a pretty weak summertime here, and it's not that far out, we believe. So not that far out, guys. So this is what we're going to look at, and we will, of course, do updates on a regular basis for our members who get this information. You will, as a free member, in our preview period that we have, you will get this kind of information in the stock index report snapshot that comes daily in the afternoons, that you will be able to get a peek at the updates in here, which Matt does a fantastic job in. So that's it for the stock market and our projection in here, which is pretty weak. Short-term view of the U.S. stock market, and that is the end of the show. I hope you have found the information to be absolutely amazing, and that you learned something along the way, that there are insights in here that you will take into your trade planning. And that's what askSlim is all about. It's about helping you with your trade planning, building your knowledge, us sharing our knowledge. 46 years as a trader for me, Matt, Arvi, our whole team, huge experience in the market, really in their own way, expert analysts, and that's what we bring to you. askSlim is growing at an amazing rate, and that's going to allow us to bring more and more information to you. But you need to become a member for us to be able to support that. To do that, and we're going to do everything I can, and we're going to do everything we can to make you the best trader that you could possibly be and bring you the highest level of success that you could possibly have. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.